I would like to introduce our first group. We will be talking today about will digital economy semi-fungible tokens have an impact on the way that micro, small, medium enterprises do trade and finance. The panel leader for this will be Steve Ballas, the MD of Blockchain APAC. Thank you, Steve.
Thank you, everybody. My voice is a little bit raspier than normal. I don't have any problems talking most of the time, and it appears I've talked a little bit too much, but I'll get through the next half an hour because I'm particularly excited about this subject matter. Many of you may not have heard of semi-fungible tokens in the same way that a year ago or 2 years ago you hadn't heard about non-fungible tokens, and fungibility was probably a concept that you hadn't given much consideration to in years gone by as well. This topic largely is about trust. It's about trust in identity. It's about trust in activity. It's about trust in compliance and regulation. And it's about trust in technology. I am honoured to be alongside an illustrious panel. I think probably the best panel I've ever sat across. I'd like you each just to briefly introduce yourselves, and then we'll move quickly into the topic.
Yeah. My name is Meng. I'm the co-author of the ERC 3525 token standard, as well as the co-founder of Solv protocol. Thank you.
Hello, everyone. My name is Kwame Oppong. I'm the Director of FinTech and Innovation at the Bank of Ghana.
Hello, everyone. This is Ying. I'm the Chief Scientist of AntChain Open Labs. Currently, I'm responsible for the technology innovation and engineering success on the blockchain platform. Thank you.
And I think the important part about the way this panel has been curated is a different view is brought by each person here. We have an entrepreneur, we have someone in government, a regulator who understands the complexity of the regulatory frameworks in which we find ourselves, and we have a chief scientist who has to deploy this technology and deal with the complications that come from it. So we'll move relatively quickly through it. There is a lot to get through. I'll start with the basics with respect to this in the non-technical sense. Mike, what's a semi-fungible token?
Yeah, thank you, Steve. Semi-fungible token is actually, a token type defined by the ERC 3525 token standard, which I co-authored last year. The standard has been approved by Ethereum community 2022, September of 2022. Semi-fungible token, you can guess it. It's somewhere between fungible token and a non-fungible token. And a better way to understand it is it's a supercharged NFT. Let me give you an example. For example, this is NFT, right? It's a supercharged NFT. We call it semi-fungible token. Why I call it supercharged? First of all, it has 4 features. First of all, it's a tokenized wallet. So that means money can flow into this NFT, stored there, and flow out of it. Okay, so it's like a wallet. You can store multiple types of asset into that NFT. So that means actually you can build a portfolio inside this NFT. I call it SFT. Yeah, you can build a portfolio inside this SFT. Number 1. Number 2, it's splittable and mergeable. So it's wallet, but you can still split into multiple pieces and merge them back. For example, if you have 10 Bitcoin, 100 Ethereum inside this SFT, then you split into 2 pieces. And then each type of tokens will be splitted accordingly. So 50%, 20%, 80% will be splitted accordingly. The third feature I would like to highlight is that it's programmable. That means everything I just mentioned is programmable. For example, you can code whose money you would like to receive, whose money you have to reject, how you would like to store this asset in your wallet, in your SFT, how long before anybody can withdraw anything from this SFT, and maybe how long before you can withdraw before after the last time withdrawal. Okay, so everything can be programmable. The fourth and maybe one of the most interesting feature is that it's regulatable. It's regulated. So each NFT has a status. So it's in normal cases it's effective, but you can with some authorized organization or rules can set it to be say frozen or suspended or expired or revoke it. So it's a very flexible type of new asset standard. With that, I believe we can build a host of new applications.
Complicated. There's a lot there, Kwame. I'm imagining you get many technologists who walk into your office and tell you they can fix the problems of the world. You need to orient towards the mandate that you have from the bank, that is making sure there are consumer protections or otherwise. How are you distinguishing between what is that mandate and, from my perspective and the research that I've done on the work that you've been doing, you've remained tech neutral, which is very difficult for a regulator to do in this environment.
Absolutely. So one of the reasons why we found this concept quite interesting is, and I'm going to move from my FinTech side and move to my regulator side, because we have a certain policy objective, which includes financial inclusion, it includes developing MSMEs for broader economic growth. And one of the challenges we have, and I think you've all seen this, is an MSME in an emerging country typically is at the bottom of the food chain in terms of how much they earn. So their products wind up in any market anywhere in the world, and unfortunately, they probably make the least in terms of margins. That's first of all. That has largely been as a result of the fact that they do not have the capacity to play at the international trading space. First problem. So that's why we're involved in another project to try to address that. But as we were working through that and making sure, one, they are credentialed, so who they are can be established by any counterparty in the world. Two, whatever credentials are attributable to them, whatever certifications they have, whatever compliance standards they meet, whatever it is, that can be established through tokenization. But there's a third and interesting dimension to this, which has to do with the fact that they can also receive payments. And in that payments receipt dimension is the ability to ensure that it is regulated as well, or there is some conditionalities in there. So for instance, from whom can they receive payments, right? From whom can they send payments to? And this is, again, from the regulatory side, issues around AML, etc. You can begin to address those issues, especially from the cross-border perspective. So really what we're trying to achieve in exploring this is, can we really empower MSMEs to really trade internationally and trade at a cross-border level? Domestic works, but for my use case, we're looking at that cross-border. Can you really empower them, leveraging this 35-25 standard to really help them participate in international trade by identifying who they are, establishing the set of attributes to themselves, whether it's compliance attributes, whether it's certifications and credentials, and also be able to seamlessly receive money. Now, on the other hand, or intercepting all of this, and again, from the central bank perspective, why this is interesting for us, is that we've been working on, in Ghana, we've been working on a central bank digital currency project, CBDC. And in addition to testing an online CBDC, we also successfully tested an offline CBDC. Works everywhere. Everywhere there's no connectivity. So people can transact digitally, not necessarily online. So as we work on this, we're also trying to anticipate what are the possible enablers that can help this scale. And so we immediately found an interesting opportunity from the semi-fungible token and the potential applications in the future. So that's sort of the dimension between the policy, the regulation, and the FinTech dimension, why we found this technology quite interesting.
So we'll add to the complexity. Ying, you're left then with your 100-plus team, your hundreds of partners and thousands of customers. how do you upskill? How do you create tooling for that kind of situation? I think recently with the project that you're running out of AntChain Zan, you're providing this infrastructure. What does that look like amongst the clients and amongst the people that you're trying to service?
So,
no, to Zan. No, Zan, we're talking about the tooling and the infrastructure that you're providing to clients.
Okay. I will share some use cases starting from 2019. This is our supply chain finance. And in this case, actually, the real-world asset is account receivable, right? So actually, the logic is like this. In order to help the SME to do the financing, so actually, first of all, the account payable of the SME was confirmed by the core enterprise and the supplier. And then the account receivable was split and transferred to the financial institutions for financing. And the financial institutions actually transfer this asset between each other or to the investor. Actually, during the whole process, we can find mature products. And we're using blockchain here to increase the transparency, credibility, and make it very easy to implement and cooperate. But unluckily, this project failed to be scaled because of facing many challenges. Now here I can summarize 3 of them. The first of all, it is very difficult to motivate the core enterprise. In this network, actually, this SME need the credit in those from this core enterprise ordering. But however, for the core enterprise, they have their big credit enough, and they have enough resources, and they can set up their own network or even using a centralized solution. So it is very hard to motivate them to online, to on-chain, right? This is the first challenge. And second challenge is, at that time, we do not have this tokenization, right? And the only financing institution is banking. It is very difficult to have other parties to participate in this financing. So the financing cost is not that attractive. This is second challenge. The third challenge is in the network at that time we only have this information flow on chain, but for the money flow, it is off chain. So we have a lot of complexity of building this on-chain and off-chain collaborations, which have a relatively higher cost. It's not attractive. That is 3 major challenges we faced. Unluckily. But however, we still spend a lot of efforts on seeking for the solutions to address these challenges. And this year, in September, so we found opportunities again. So we collaborate with GSBN to initialize this GBL, which stands for the Electric Bill of Lading Tokenization. So you can see the above challenges can be addressed well in this scenario. First of all, as I mentioned, the first challenge is it's very difficult to motivate the core enterprise. But in this scenario, this is an international shipping scenario. The party who are going to do the financing are the seller and buyers. There's no just a core enterprise in this. And they have to be online because both of them, sometimes they need to do the financing. So the first challenge can be addressed in this scenario. And second one is we do this tokenization. Right? Tokenization, we just code these EBL into smart contract. And therefore, we can see the institutions of financing include the banking, include different institutions as well as individuals, which greatly increase the liquidity and lower down the financing cost. And second challenge have been addressed, right? And third challenge, potentially we will have a CBDC, as I mentioned here, stablecoin here. Then we can combine both information flow and money flow on chain. Therefore, greatly increase the financing efficiency and lower down this cost. Yeah, so we can see this RWA, semi-fungible token, Web3 infrastructure, and greatly increase the financing process transparency, verifiability, and liquidity, right? And very easy to do the regulatory compliance. So we see there's a great opportunity.
Mike, there's a lot of complexity. People have been talking about supply chains for years. I think I remember back in 2018 it was what people were going to try to do, and as was just explained, very complicated. Some of these things stop at POC. You were recently involved in the Reserve Bank of Australia's CBDC trial.
Yes.
You tokenised an invoice. So it's a bit easier maybe for people to get their head around what that looks like and then how you can identify a use case for ERC 3525.
Sure.
Do you want to talk through what that trial looked like?
We were being involved in the Australian CBDC pilot program early this year, and we built a pilot use cases for this program, which called tokenized invoice. So the basic idea is that we use our SFT, we use the ERC 3525 token standard to build the digital invoice on chain. So I just mentioned that the SFT has some very good feature. So in this use case, we use the 3525 token SFT to represent a digital invoice. Then the best feature is that, okay, let's make a role play. You are my client, and I'm a small vendor of you. So I sign a contract with you, said that in 90 days you will pay me 1 million. Okay, then that means I issue invoice to you, and you confirm that invoice. That means you will pay me in 90 days. Okay, but I need cash today. So I would like to do some things like so-called invoice finance or factoring, right? So that means I would like to sell my invoice to Kwame. Okay, but the problem is Kwame needs to authenticate the invoice. If it's paper, then it's very, very hard. It's very difficult to authenticate it. But if we build this invoice as SFT on blockchain, it's very easy to authenticate that it's issued by me and signed by you. So Kwame evaluate everything and believe that this is a good asset. So he would like to buy a part instead of the whole part, the whole thing. He would like to buy just maybe 500,000 US dollar from me, debt from me. Okay, so in this case, I can create a paired ERC 3525 SFT called receivable token. So this paired receivable token, is bound with the invoice. So this receivable token, has a special capability that once you transfer money into the invoice, it will be automatically forward to the second receivable token. And this second receivable token can be split into multiple pieces. So I can split into two pieces, one 50%, the other 50%. I keep one piece and sell the other piece to Kwame. So at the end of the day, Kwame can split it into more pieces and sell it to Ying. So at the end of the day, maybe at the due day, actually there were 20 or 30 different people who hold the pieces derivative from the receivable token. You don't need to worry about that. You don't even to be aware of this. You can blindly simply transfer the CBDC into the invoice, and that invoice would automatically, dispatch or distribute the cash flow to each holders, with the correct numbers. So that is the case we do for the Australian central bank, and they rank us a very top project in the whole program, and label us as a smart payment solution.
So we've got supply chains which are particularly complicated. We've got invoices. Both of those are largely efficiency issues and issues where you are trying to make processes better. But Kwame, financial inclusion is a critical tenet of what you're trying to do. What's the last mile challenge for a lot of countries and for people? Where are the data gaps that you think this sort of technology hopefully will help fill to create the opportunity for credit, for example, to be provided to people.
Well, thank you very much. And I think as you listen to Mark, you begin to realize that between the variations of functionalities and the standard protocols that have been incorporated, and there are several permutations of real-life implementations of this. And so one of it, obviously, is what we are looking at. And if you took from a financial inclusion perspective, so I gave an example, I think he gave an example of invoice factoring. I gave an example earlier as well in terms of MSMEs being involved in cross-border trade. You can even take something as basic as, smallholder farmers and actors in the rural agricultural value chain being able to not just facilitate and receive payment, but also be able to document a transaction footprint in order to leverage that for additional financial services. Things similar to what he's described. These are all things that have real life implications for smallholder farmers who perhaps have given up their produce, cashew, cocoa, whatever it is, for exports, but have to wait for a period in order to get paid. Could they receive payments or some form of payment much earlier? So that's an immediately impactful solution. And also, if you look at this whole idea that is being discussed, right? So in our case, we're looking at several things, and even the fact that he mentioned from a CBDC perspective as well, the payments that could come in could very easily be distributed into, or safely and credibly be distributed into the various legitimate recipients, if you could call it that, or the holders of those debts. Imagine what that means for lenders of all kinds in the financial service ecosystem, the confidence to be able to adopt it. And also, as you were speaking, this is probably off the conversation, but I should highlight this. If you look at what happened in 2008 in the US subprime mortgage crisis, imagine if some of these mortgage-backed securities at the time when they were being created had the benefit of such a solution.
Yes.
Because we have a scenario where people who even intended to resolve their mortgage, or to at least negotiate with the lenders, you couldn't even track who owns what, because everything has been bundled and it was really difficult to really disentangle them. So that's an example of what technology can really do to solve real life problems. And in our case, our focus is on financial inclusion as well as economic growth, particularly focusing on MSMEs.
Question about the challenge of interoperability, standardization. Where do you think we're at with respect to those topics? Because we've been talking about interoperability and standardization for quite a number of years. How are you seeing that space?
Yeah, okay. The interchain operability is very important because we're talking about asset. It cannot flow within only one blockchain. It should be flow within the network, right? So then many people have started working on the standard several years ago. Actually, in the year of 2020, there were about 20 organizations initialized this IEEE interchain operability standard, and AntChain is one of them. Yeah. Over 50 members joined this standard generation, and finally we successfully published this standard in the May of this year. So the full name actually is IEEE Interchain Operability of Data Authentication and Communication. IEEE 3205 is standard. And also in the May of this year, we also open source implementation of this standard. And I want to show my acknowledge of all the many teams join this program, and let's build this standard together. And this is very important now in many of solutions. Interchain operability is a fundamental requirement because, as we mentioned, data and asset should flow freely within the network.
So we're nearly down to the last 5 minutes. There was a big announcement the other day from MAS, the Bank of Ghana are involved, project DESFT. Do you want to give us a quick explanation of what was announced and what the potential looks like there, Mike?
Sure. I'll give a very quick introduction and leave the more information to be introduced by Kwame. So it's a joint effort among MAS, Bank of Ghana, and Solv Protocol, as well as Zcloak. So DESFT stands for Digital Economy SFT. So we are exploring, as Kwame just mentioned, how to apply this new tokenization technology to develop the financial inclusion, right? So help facilitate the SMEs to be able to engage in the international trade and access of financial services. The basic idea is very simple. If we can use this SFT to tokenize their ID card, their transactions, their invoice, their orders, and put every evidence, on chain, then over the years we can easily evaluate the creditworthiness and the quality of their goods of a small SMEs, right? So that means we will provide this tokenization, not only asset but also credential solution for in this use case. But I would like to mention that Kwame's team, they collaborate with us, made some breakthrough in this technology, as well as MAS. We are not only, you must mention that, you must question that if I put every details on the blockchain, then my competitors will know me better than I am, right? So Kwame's team and MAS asked us to build a controllable transparency feature into this solution. That means we only expose the information that we allow public to know, and keep everything else, keep all the private data off-chain. So we protect the privacy of you, but we still can enjoy the advanced feature of SFT. So and as well, we also support regulation, as well as I introduced a few minutes ago. So that's my part, please.
Well, thank you very much. I think you've captured most of it. From our perspective, it was really a matter of how do we take this technology and apply it in a way that, not just from a policy and regulatory perspective, it can be useful, but can it support our broader digital economy initiative? So Ghana is going through a transition to try to digitize the economy significantly, and that really is a touch on every aspect of our lives, right? From payments, banking, the legal environment, judiciary, everything else. So this is an initiative we're on. But I just wanted to highlight the fact that this is in line with what you're seeing most countries do, right? Even from the perspective of establishing digital public infrastructure, which today is there's enabling certain things from KYC to interoperability and et cetera. This is basically thinking of the next level of what needs to happen.
Yes.
Right? And in this case, particularly, we're looking at demonstrating the efficacy of such a solution. And so what we're hoping to do is, in addition to what we've been able to do so far, so there are some other projects going on where currently, for instance, so in countries like Ghana, and if you took Cambodia and many other countries, SMEs couldn't get loans unless they put collaterals down. That collateral could be land, houses, etc. But collaterals really do not mean anything in today's world, unfortunately. But this is what traditional banking has been about. So there's an initiative looking at testing the viability of an intent-to-pay model versus an ability-to-pay model, or focus on intent-to-pay. So this actually potentially adds that next layer of I think, significance and efficacy to the program we're working on. And we're hoping by next year, May 13 to 15, we're having an African-wide conference on innovation, investment, and impact in Ghana. And we're hoping that we're going to be able to showcase some amazing results from this project. Thank you very much.
Thank you.
We're down to the last 60 seconds. I just want to make the observation that the subject matter is moving very quickly. The reality of the absence of regulators, I chat to a lot who have an open-minded view with respect to this technology. It's a credit to you, Kwame. It's something we all need to make the case more effectively when we're speaking to government in relation to this technology, because the truth is, telling them you can fix all problems doesn't solve much when you don't understand the context of the people that you're speaking to. If you could please give a round of applause to the panel, and thank you for giving us the time this afternoon.